The price of gold slipped on Tuesday, trading 1.0% below last week's new all-time dollar high, as betting eased back that the US Fed will make a sharp cut to interest rates at its September meeting. A New York stock market edged lower again ahead of tomorrow's quarterly earnings report from AI chip-making giant Nvidia, now accounting for more than 6% of the S&P 500 index after adding $3 trillion to its market capitalization since ChatGPT launched 20 months ago. Nvidia has become a critical market driver, says the Financial Times, with its results treated almost as a macro event. Betting on a half-point cut at next month's Federal Reserve meeting, meanwhile, fell back to 28% of trader positions, according to Derivatives, Exchange the CME's FedWatch tool, dramatically below the 85% odds seen at the start of this month after bad US jobs data was followed by a slump in global stock markets led by a crash in Tokyo equities. Peaking at $2,531 per troy ounce last Tuesday, gold bullion traded in Global Hub London today edged back to $2,505. The time has come for policy to adjust, said Fed Chairman Jerome Powell in his speech to the annual Jackson Hole Central Banking Symposium on Friday. The direction of travel is clear, and we will do everything we can to support a strong labor market as we make further progress toward price stability. Between now and the Fed's the 18th of September interest rate decision, U.S. inflation data on the Fed's preferred PCE measure for July is due out this Friday, a day after revised Q2 GDP growth, with August jobs figures then coming on Friday next week. But while inflation has dropped towards the Fed's official 2.0% per year target, the elephant in the room at Jackson Hole was, of course, what the highly contested U.S. election and what it will mean for rates and the global economy more widely, notes the latest analysis from Jonathan Butler, head of business development and strategy at Japanese conglomerate Mitsubishi's precious metals division. Both candidates, Harris and Trump, are likely to favor lower interest rates and a weaker dollar, and both are likely to continue the fiscal largesse of recent years, albeit focused on different outcomes. These are essentially positive factors for precious metal prices, low interest rates, a weaker dollar, with inflation continuing to support gold and its sister metals. Both Trump and Harris are net inflationary, agrees precious metals strategist Nikki Shields at Swiss Bullion Refining and Finance Group MKS PAMP, and sticky and structural issues remain, including deglobalization, resource nationalism, populist politics, labor, plus other procurement costs. Yet, Jackson Hole confirmed Powell has pivoted away from his usual hawkish approach, and geopolitics are also back with the Mideast on edge. With Gaza reporting a further 20 deaths from Israeli attacks this morning, the United Nations Secretary-General Antonio Guterres yesterday urged calm after Israeli jets made preemptive strikes against Hezbollah sites in southern Lebanon at the weekend, as the Iran-backed militia launched rockets and drones at civilian targets across the border. Moscow, meantime, continued drone and airstrikes on Kyiv, Lviv, and Zaporizhzhia, as Ukraine claimed to have control of 100 towns and villages in western Russia in its counter-offensive against the Kremlin's invasion starting in February 2022. Current U.S. President Joe Biden's national security advisor today met China's top diplomat Wang Yi to discuss worsening tensions in the Eastern Pacific after Japan yesterday scrambled fighter jets after a Chinese spy plane entered its airspace, and the Philippines' defense secretary accused Beijing of being the biggest disruptor of peace in Southeast Asia amid fresh naval blockades and standoffs around disputed islands in the region. Unlike gold bullion, silver prices held flat around last weekend's level, trading 40 cents below yesterday's 6-week dollar high of $30.19 per troy ounce. Crude oil, meantime, edged back from Monday's spike to 2-week highs above $81 per barrel of Brent crude, made after the governing forces in eastern Libya threatened to shut down local oil fields in a worsening dispute with the more widely recognized government in Tripoli over who should run the country's central bank. Please like this video and subscribe to our channel.